Hello, this is Jenny Clark with Solvability, and today I've got a special guest with me, Miriam Ezell, and we're going to be talking about preparing the Incurred Cost Submission. It's also called the ICE, and federal contractors have to submit this annually under certain conditions. So hey there, Miriam, how are you doing today?
I'm doing well, Jenny. How are you?
Pretty good. How many of these ICE things do you think we've done?
I think personally I've done about 20.
Mm-hmm.
How about you?
Well, I'm thinking about that same number, and then you start thinking about the people that you helped every year because they loved it so much that you did it the first time. They just said, can you just come back? I'm going to put you on my budget.
Well, you know, it gives them peace of mind knowing that they have somebody to call to help them with this, and it's, you know, it's routine for us, but it's a headache for them, so it's a win-win.
Yeah, I think the other part about it is the ICE is very structured, and if their accounting system isn't set up to follow this structure, it's hard for us to help them, and it's really hard for them to do it by themselves. And I think that's a big hurdle for everybody.
Sure.
So
sure,
Mimi,
absolutely.
yeah, so Mimi, why don't you just tell them a little bit about what you are and how we worked together in the past?
Okay, so I'm a CPA, and in my former life, I was the Vice President of Finance for a government contractor where the ICE was required. But I've been in government contracting for 20 plus years, and left that job at age 50 and ran into you, Jenny, as a result of you teaching one of your classes. And I just wanted to stay up to date on government contract accounting, so I attended one of your classes, and that's how we met. And then I came under your umbrella and started consulting with Solvability back in 2009.
Well, that was like a landmark day. I remember that.
Yeah.
Yeah. Okie doke. Well,
that
so
was the same day we found out that we had our birthdays are only 4 days apart. And
I know. And I'm older, aren't I? Yeah,
yes,
that's right.
4 days older. You're my elder.
Yeah, well, and what's really funny about it is people that care about government contracting love to meet other people in it so that we have somebody we can commiserate with or ask questions to or figure out how to get these different answers, because there's some really odd things that happen in government contracting. You never want to feel like you're alone.
Right, and it is kind of scary for a new government contractor when you don't know what you don't know. So it's always have somebody that you can rely on to call and get questions answered.
I think the other thing about it is, you know, when you're doing an accounting report, you want it to be right, and you don't have that sense about, is this right or am I just guessing? You might guess a few times, but it does get very concerning because you're sending this in, and it's going to be signed by an executive of the company with a certification statement that says, I hereby certify that this is true and correct to the best of my knowledge. That's a lot of concern. You want to make sure it's right. So let's go ahead and talk about the incurred cost submission. What I did is I thought about the questions that I get most frequently from people. So I thought we'd just run through them. But can you explain what an incurred cost submission is, Miriam?
Sure. It's sort of like a tax return for the government contractor. It's required by the Defense Contracting Accounting Agency, and it is submitted 6 months after your year end. And it's well, like you said earlier, there are certain requirements, and I'm sure we'll go through those as to what specifically makes you have to fill out an incurred cost report.
Yeah, and I think it's basically if you have a cost reimbursable or a cost plus contract, and then there's also certain conditions. If you have time and materials, they'll ask you to report the hours and be able to tie it back to your billing. But it's basically like an annual report of what your actual costs were, because when you went through the year, you billed at your provisional or estimated rates, and once a year you got to true up. And, of course, the worst case scenario is you underran, and you got to write the government back a check. So I always like people to call me about their indirect rates before the end of their fiscal year, but because by the time you're doing this, you got no choice. So as far as how do I know if I have to prepare an incurred cost submission, we just talked about cost plus. I know this question comes up a lot, and you've talked to people that say, I don't know if I do it or not. What have you had to tell them to do if they're not sure?
Yeah, sometimes I've had them call the prime or their actual DCAA representative to find out if
Hmm.
they're required to fill it out.
Yeah, and I've also heard of people calling their ACO, their authorized contracting officer, if they know who that is, and ask, but
Sure.
there's so much turnover in these fields that a lot of times it's like, I don't know, but you as the contractor are responsible whether somebody gave you a good answer or a bad answer.
That's
So
true.
I guess the next question is, will I be able to do the incurred cost submission by myself? So I guess if you're a cost accountant and you've been working at a government contractor for a good long time, you could do it by yourself. But what do you think, Miriam?
I would suggest you have somebody train you or work with you for the first time so you understand how it all comes together. But I would not tackle it on my own. It would be a nightmare.
Yeah, I think that's a really good point. There are a lot of people that I worked with them on their first one and showed them what the process was and checked them along the way and give them kind of homework of what they needed to do next. And then the next year, they might have asked me a couple questions or they might not have needed me at all. And that's really our goal, is to show people how to do this process so they can do it on their own.
Sure, absolutely.
What about how long should it take? People always ask me, well, how long is it going to take me to fill out this thing?
And it varies depending upon how many contracts you have and how detailed your company is, how many indirect pools you have, etc. Mine have run anywhere from 20 hours to 40 hours. How about
That
you?
sounds about right. Yeah, I think that sounds about right to me, because we're normally working with companies, say, under 10 million in sales.
Mm-hmm.
If a company has a lot of cost plus contracts or a lot of task orders under cost plus, it's going to be a really long list and it's going to take longer to do that, because basically you have to report, here's how much my cost was on each of these cost plus contracts and here's how much I billed. So if you think about it, it's like one line per invoice, or one line for the annual invoice summary would be the way to look at it. So if they've got a lot of lines in there, a long revenue summary or similar document, it's going to take some time to do it. And some people are on QuickBooks, some people are on other software. Some of the other software has the information. They say you can run the reports, but usually what you have to do is run the reports, convert them to Excel, and pull them into the ICE report. I know when I've worked with auditors before, if they don't like the way your reports look, you have to do it over. You have no choice.
Mm-hmm. Sure.
So I think you're right that 20 to 40 hours is probably about right. The very first year you do it, it's going to take longer. After that, you're pretty much dropping new set of numbers into something you prepared from the previous year. So it shouldn't be too bad.
Right, right.
Yeah. So the other question people always ask me is, who do I send this report to?
Well, it would go to your DCAA representative, whoever that is.
Okay. And it seems to me that people can go to dcaa.mil and find out who their audit office is. That you can look it up by zip code or something along that line and find it that way. The other thing I've always made a point of doing is calling the office and getting a point of contact, because don't you usually have to address this like to a branch manager or something?
That's correct. That's correct.
Yeah.
So getting their name and contact information is very helpful, yes.
Yeah. The other thing that I found out when I did this before, I had a client I was working with, and she was from Texas and in Albuquerque or vice versa or something like that, and it kept bouncing back and forth over who was going to do the audit. Did they need to do an audit? When they were going to schedule it? How are they going to do it? And every time we would call and send them all the information again, they'd say, we can't find it. So make sure that you're making a copy of it. And the other thing that they told me is, here's the email address to send it to. You don't get a confirmation back, but here's the email address to send it to. So make sure that you're calling and asking for very specific questions, very specific information. And I've had people even print the thing out and drop it in a, send it registered mail so they get a return receipt and make sure that it's been received. But no matter what you do, because there's a delay between the time you submit it and the time it gets audited, expect it to be lost, and it's your responsibility to prove you sent it in and to produce it again.
Absolutely.
Yeah.
Good,
What
good
about
suggestion. Yeah.
what about prime contractors? Do you remember that time we were doing the training session in Colorado, and I was so excited because we had a former DCAA auditor in the session, and we had this discussion about, can my prime require me to send their incurred cost submission to check my actual rates? Do you remember that discussion?
I don't, but normally I don't want my prime contractor to know what my rates are.
Why not?
Normally I want to keep it as confidential information.
Well, you're right about that because it's proprietary. If you give them your rates, they're going to know what you should bid on other items, and they might try to hold you to it. The other thing is a lot of times you're a competitor to them on others, and so you don't want to tell them what your secret sauce is.
That's right.
I've also run into situations where there's several different ways to calculate your indirect rates, and different people will tell you, well, that's wrong. Well, maybe not. Maybe they just haven't seen it done that way.
Mm.
What about the audit? I don't know how far behind DCAA is, but can you talk about the audit? I guess you've got incurred cost submissions that you've done that haven't been audited yet, right?
Right, and they can vary from 3 to 5 years before the auditor shows up.
Yeah, and that's a long time to go. So that would mean that if I'm doing an incurred cost submission here in 2017 for my 2016 fiscal year, it might be 2019, it might be 2022 before they show up. And if you're a growing small businesses, you're going to have gone through several people before that, before that auditor shows up. So you need somebody that knows what they did, how they got there, and can help produce the papers, and also make sure that you've got fairly complete backup for the incurred cost submission data, because they tie it back to your accounting system. And I don't know how many times I've talked to people and they said, well, we were on QuickBooks now, or we were on QuickBooks then, and now we're on Uninet or something, and they don't know how to get back to their QuickBooks where all the data is stored. It's always terrified me that I'll lose the password or lose the backup.
Yeah, right.
So the other thing that's going on is because DCAA, Defense Contract Audit Agency, has been backlogged, they have created a lottery system for small businesses, so they won't audit every single one. What they'll typically do is they'll audit your very first incurred cost submission. If that's okay, they may just send a letter for several years in a row that says we are accepting the indirect rates that you submitted because we found them to be reasonable. And typically when they say reasonable, it'll be compared to the previous year. But it's one of those things that kind of hangs over your head until they actually do the audit.
Sure.
Number 8.
I got another comment on your last question there about the auditors showing up to do the audit. So I've got a client that the auditor has done what they call desk reviews, where they sit at their desk at the DCAA office, and so they may call you and ask for a sampling of some things, and it's very minimal, and they will, give you your letter of your indirect rates as a result of just doing a desk, what's called a desk audit. So
I have heard of that, and I've also heard people that warned off that because when DCAA does an audit, they're supposed to do an exit interview before they write their audit letter, so you have some idea of what the audit letter is. If they're doing a desk audit and they write something bad, you're going to have a lot more fighting to do. So if they are doing a desk audit, be sure to ask them to call you when they're pretty close to it. And what I would do is give the excuse of, can you review some of the results so I know if I need to change anything, that kind of thing, to try to get them to do what's called an exit review, because you don't really know what they're going to put in that report. And once it's in writing and starts going up their bureaucracy, it's really hard to get them to change. And there have been opinions that I have a difference of opinion with an auditor that it's like, okay, this is only $500. I don't know why you're arguing with me over that, but there's no such thing as materiality in the DCAA world. I've had them waste a lot of time going over small money.
Huh, that's good to know.
Yeah. And then what about the actual indirect rates? Have you ever had to do a variance voucher, Miriam?
I have, and I've ended up sending in money as a result
of the
variance voucher. Yeah, write a check.
So it was a bad surprise.
It was a bad surprise.
Well, can you talk a little bit about when that situation occurs and what it looks like?
So when you've adjusted all your costs and you've come out where you were saying earlier that sometimes you are invoicing during the year rates higher than they actually are, and then at the end of your incurred cost report, your rates are lower, so it shows that you owe money back to the government. So as a result, you used to fill out, well, this was several years ago, where we actually had to fill out a voucher and show the difference in the rates and what was due back to the government, and then we'd have to write a check for whatever that amount of money was.
Yeah.
So we would show the variance on the voucher of what was
billed. And it seems to me that, yeah.
And what was incurred.
Yeah, and it seems to me that I've been told you just can't credit it on a future voucher. You actually do have to write them a check. And because of that, you have to call and figure out where you send the check and how to send it.
Right.
But either way, I know I had a client a couple of years ago that I tried to explain this whole risk of underrunning and how it would work and everything else, and I just couldn't get their attention before the end of the fiscal year. And as a result, they wrote a check for $50,000 back to the government. So nobody really wants that situation. That $50,000 could have been used to write a profit-sharing check, and they would have been able to keep it because it would have been actual cost.
There you go.
That's painful.
Very well said. That is very painful.
Okay. All right. As far as what we're going to talk about during the remainder of this discussion, we want to talk about the requirements for ICE, and I realize I actually don't have much to say about that, except if you look at your contracts and you go back to the section where all the clauses are, the clause you want to look for is called FAR, for Federal Acquisition Regulation, 52-216-7. It's called the Allowable Cost and Payment Clause. That clause basically says that you have to keep track of your funding. Most of these contracts are incrementally funded, which means you might have a $5 million contract, but they'll fund it for 3 to 6 months at a time, so they might send you funding for $500,000. And when you get to 75 or 85% of that, you write a letter to notify the contracting officer you need more funding. That's part of the allowable cost in funding. The other part of the allowable cost in funding says that you're going to be required to complete an incurred cost submission at the end of the fiscal year so that you can settle up the difference between the rates you used for billing those costs and your actual rates. The next thing we want to go over is going to be some pre-ICE, preparing for the ICE or the incurred costs electronically. What are those steps? So we're going to go over a couple of those. And then we've got a checklist for you. And then we're going to just briefly run through some examples. So Miriam, I've got the screen up about what you need to look for as you're closing your fiscal year. And, you know, we've done this so many times. I just thought maybe I should just have you describe that a little bit.
So there are certain costs that are unallowable, such as interest expense, penalties, GSA fees, contributions. So when I go through the chart of accounts, I look for these items to make sure they're in the section of unallowables. What else would you?
And usually you have to go, yeah, usually you have to actually go into the detailed transactions because it might look okay in the account, but then when you double click to go see what the detail is, it's like, oh, I'm sorry, your company Christmas party is not, it needs to go in unallowable costs, but we're also looking for entertainment and alcohol, all kinds of things like that. I think the other thing that we usually do is I look and see if I've got any costs that I think were probably billable or direct costs that are down mixed in the G&A section or the overhead section. For example, a lot of times I'll look at these reports and there'll be something that says subcontracts, and I'll look at it and it's $150,000, and I'll say, I'm pretty sure that that was billed on a contract, that you had that subcontract to support some work you were doing. So we're scanning the general ledger to look and see what's misclassified and where it goes. I think that's pretty much what we're saying, right, Miriam?
That's right.
Okay. So the next step would be to figure out what your indirect rates are. and Mimi, people always want me to describe this in 10 seconds, what your indirect rates are. Not sure I can do it, but it's really, most companies have an indirect rate model that splits out their cost into direct cost, fringe, and overhead, and G&A and unallowable. If they've got that, they can show how they calculate their indirect rates for fringe and overhead and G&A and so forth.
And if they don't have that model, you have an Excel spreadsheet that can be used to calculate the rates at that point.
Right. We have the rate and pricing model, and we use that, and there are different variations of it. But what we're really trying to do is take the cost off your income statement and classify it correctly so you know what people's indirect rates are. So the other thing we'll do in getting ready for all this is I will make a copy. I'll make a backup copy, and let's say we're using QuickBooks. I'll make a backup copy of the QuickBooks file, and I'll call it my audit directory, and I usually save that. I'll probably save another copy again, but I always like to have my starting point. I'll print income statements to Excel, my general ledger detail, or an account listing with the detail, trial balance reports. And usually someplace on my own computer, I'll put it in a folder and save it. And then I also want to keep hard copy in a binder and make sure that I'm saving that, because they're going to look at both, but you want to make sure you've got as many ways as possible to back up the numbers that you're showing in any of these reports.
Absolutely.
Mimi, look at that. Yeah, look at that list for, this is really shorter than it used to be. The ICE checklist is what I've, So which one is your favorite checklist? Which one's your favorite report to do?
My favorite report would be Schedule L, reconciling labor to payroll.
I knew you were going to say that. Can you kind of explain what they're trying to do with that?
So they're trying to reconcile the labor that you have booked in your records and compare it to what you have actually recorded to the IRS through the 941 forms.
Yeah, so it's like reconciling the sum of each quarter's wages, plus you have to subtract out wages that were earned in last year but paid in this year. And on the other end, your labor cost incurred through December 31st, in our case 2016, that was paid in early 2017. And the first time I do it, I never get it right. After I've gotten it right one year, I can usually get it right after that. But I always have a little bit of an amount, and I just call it variance. And I hope that it's under $1,000.
Yes, it's quite a puzzle, actually.
Yeah,
there are
I think that's
things
really...
There are other things recorded on the 941 that either need to be added or subtracted out, such as life insurance over $50,000 that has to be reported as wages, or their 401k has to be taken out. It's taken out of the 941 numbers, so it's like a puzzle.
It's definitely a puzzle, because I'm thinking of on your W-2, there's a line for your federal gross wages, and that's usually after 401k and your Section 125 cafeteria plan money's been deducted. So those are the kind of differences you're talking about. I used to say, well, you could just take Medicare wages because 401k isn't taken out of that, but that's not true either, because your cafeteria plan comes out of that. So it's a pain.
Yes, absolutely.
Yeah. So that was going to be the one that I would have said is the worst, the most complicated one. The other ones are the ones like B, C, D, and E. That's a list of, here's my accounts that make up my G&A pool. Here's the costs that are unallowable that are listed with G&A. And those are going to be your unallowable accounts like interest expense. And then you'll calculate what the base for G&A is. But you've got all of those costs. The other one that I think takes a long time to figure out is both H and I.
H and I, sure, absolutely. They get pretty detailed because you're listing.
And so isn't H organized by type or something?
It is. Fixed price, cost plus, T&Ms, R&D.
Yeah.
Yep.
And I guess they do that because they're going to audit the cost plus work, and they're going to audit pieces of the time and material, but usually your fixed price and commercial. you have to show that you have to account for them because that's part of your total revenue, but they don't typically audit those things.
That's right.
Yeah, and so it's broken out. It's got a column for your direct labor, your direct travel, direct subs, direct material, columns for fringe overhead and G&A, and you're supposed to basically be able to tie that entire thing to your general ledger and reports. The one that gets me, though, is number I.
Yes. So I is pulling from H, those claim costs, and comparing it to what you've cumulatively billed. And it also has cumulative cost on each contract and compares it to cumulative billed.
Yeah, and it's no big deal if you have a job that only lasts 6 months, because it's not going to carry forward from one year to the next. It started in 2015, it ended in 2015, so it doesn't carry forward. But the ones that are complicated, and that's why if you do cost plus contracting, you've got to be concerned about this, and you have to have a good method or an accounting system or spreadsheet tracking to track that cost plus work, because you have to actually track it by fiscal year. So, an example. Right. If you had a NASA contract, a lot of NASA contracts are cost plus award fee. So it's a 5-year contract, and maybe you started it in April of 2014. So you're going to have recording of what your actuals are for April through December 2014 and what your indirect rates for 2014 were. 2015, you're going to have an entire 12 months worth and what your indirect rates, but whatever your indirect rates were for 2014, and let's say that it was 40% overhead and 10% G&A, and in 2015 it's 37% overhead and 12% G&A, you would think it doesn't matter very much, but you've got to do a lot of accounting to prove where all that ended up. And it seems to me, the other confusion I've always had with this is on the billing side. When you're doing cost reimbursable contracts, you've only got to look at the cost, and you have to exclude the fee from the calculations. And what's odd is it doesn't show that inside the Schedule I. There's no little asterisk that says, oh, by the way, when you do this calculation, exclude the fee. Do you know what I'm talking about?
Yeah, that's right. Oh yeah. I've run into that many a time.
Yeah, yep. It's very confusing. The other one go ahead.
Because you're comparing apples to apples. So you want to compare your cost to cost, which means you don't include the fee billed.
Yeah.
It's cost billed to the cost incurred, yeah.
Right, because you're used to being able to take, well, here's my total billed, and it's a number that would include the fee, and now you've got to go back and back that out.
Yep.
So the other one that I think both you and I have worked on a bit is Schedule K, and that's just plain tedious. Can you explain what that is?
So for every time and material contract, you have to put down each labor category under the contract, their billing rate, total for that, if there's any travel or ODC, the G&A rate that was billed against that contract. So if you have a lot of T&Ms going on, that's a lot of numbers.
It's a lot of numbers because you'll have to list every labor category and the billing rates, and if the billing rates have changed in the middle of the year or over the term of the contract, you've got to show that and make it all tie out as well.
That's right.
And, you know, so many people I know are doing these in spreadsheets, and they may not have it broken. They might have to go back and add up all the spreadsheets to get the total for the year. If you're doing something so you keep track of the cumulative every time, that's great, but you have to remember to create a summary at the end of every fiscal year, and a lot of people don't know to do that.
Right.
So the other things on the list, there's the management decisions, and that's only if you have some major changes in your processes or how you're doing that. They'll ask you, do you have any contracts that are closing out? And that means that a cost-plus contract you were working on physically ended, say, in 2014, and your final bill for it was in 2015. It's that type of thing. It doesn't come up very often. The other thing that they're asking you to do at DCAA is do some of the work that they used to do. There's some comparison schedules you have to do, so that if your G&A rate did go from 10% to 12%, they're going to have a schedule where you say, this is how much cost it was these years, and you have to explain, and it's like, man, we hired 3 people in accounting because our company quadrupled in size. Why are you asking me all these questions? And what else am I supposed to do? And it's kind of intimidating. The last thing is there's some executive compensation information as well that you have to worry about. So the ICE basically proves the indirect rates. And what we're doing with this is we're taking the pool of cost divided by the base is what we come up with as the indirect rate. So I've got a little summary that I try to share with people of how these indirect rates are normally calculated, but just be aware that it could be different. There's a few different variations of this, and it's going to depend on the company, how they're used to calculating indirect rates, and you need to take this into account. But in general, the fringe pool is your paid absences, your payroll taxes, and your group benefits divided by productive labor, meaning labor excluding the leave time that was taken off. You've got overhead, which is the support cost of your technical workforce. That's typically divided by your direct labor, which is the labor being billed on contracts. And then your G&A or corporate expense is your G&A cost, and that's going to include your executive office, human resources, accounting, their related fringe, their related facilities, any support costs they have, and then costs that are unique to corporate, like accounting fees, legal fees, bank service charges, and so forth. So the way that we usually work with people is we have a rate and pricing model, RPM, where we calculate their indirect rates in one big monster spreadsheet. And if we can get that done for them, then we work with them to complete the ICE. And I guess the biggest challenge, Miriam, is just the idea that you go into a company and they haven't been set up, they don't have their accounting system set up to break into pools and direct and indirect costs. And that's where really it's all time consuming. Have you run into those?
Oh, yes.
What do you do?
Absolutely. Absolutely.
Yeah.
Well, it takes time to, then you have to segregate the cost, especially when they have one line item for payroll.
Oh, yeah.
You have to break out what's direct and what's G&A and what's overhead. It's a nightmare.
I think you're right about that, because the one that I see most commonly is people will set up QuickBooks and they'll say, yeah, I had somebody help me with this, but they didn't have somebody help them that really understood government contract accounting. And so, as you said, if they're on Intuit's payroll, unless they've done something specific, all of their labor cost, all of their payroll costs are going to go into one account called payroll expenses.
Right.
So I'll have $4 million in payroll expenses when, in order to pass this audit, I should have had $3.5 million in direct labor, $300,000 in overhead, and some amount in G&A labor, some amount in holiday, sick leave, vacation, plus my payroll taxes being itemized. And it is a total nightmare because you have to go back into their payroll records and look at their timesheets and figure out how to break that out.
That's right.
The other thing I wanted to do is just talk real briefly about where you get this ICE. And we're calling it an ICE because it's incurred costs electronically. That's the short thing for incurred cost submission. So sometimes people will call it an ICS. When you go out and Google ICE on the internet, you get, what is it, immigration control, something like that. So it's hard to find this information. But what I typically do is send people to dcaa.mil. There is actually a phone number on dcaa.mil where you can call and ask for support. I have submitted emails and I have called in, and most of the time what they do is they say, read the manual. They don't really answer your questions. They're very nice though, very nice, but not really necessarily getting answers to the question. But there's a download for this 26-page spreadsheet, and there's a setup page where you fill in your information about your company and some check boxes about how you're doing calculations, and it's not something you want to guess at. If you do guess and you guess wrong, you can go open up a brand new copy and try it again. And I've done that a lot. Have you, Mimi?
Yes, I have.
Because sometimes you're not, even though we've been doing government contracting for a long time, it's unclear what the answer you're supposed to put in some of these boxes.
Right.
So it's a little trial and error.
Yes.
So you run a setup process, and it calculates and has all these formulas. And most of the time those formulas work, but I have any number of these that I've done, and every time I open it, it gives me a message that says there's an error. And all I know to do is hit OK and click past it, because it's an error so deeply embedded in the back-end calculations that I can't do anything about it. And all I can do, I just make sure that I've checked everything on a calculator and I put it in other spreadsheets and made sure it's right, because there are things that come up. You can tell that this wasn't written by a modern Excel user. I guess that's what I would say. Kind of intimidating, though.
I'm glad you said that, because I've had that error message myself. I
Yeah.
just have to keep hitting OK.
I know. And then people will ask me why that happens, and I just have to say, I'm not really sure why, but they've changed this around over years, because this is probably about the third version of the incurred cost electronically, and it's still got some bugginess in there. And it's got things that they just bug me. You know, they didn't use the same size fonts or even the same fonts at all from one schedule to the next. And they have all these blue and green and yellow cells, and it says, please remove these extra lines. I never remove the extra lines because I'm afraid I'll miss something. So anyway, there's a Schedule A, which is a summary of what your indirect rates are. There's a Schedule H, which is splits out your direct and indirect costs and itemizes it by contract, and it's sorted by whether they're cost type, time and material, fixed price, commercial, and then it actually does include your R&D and IR&D, bid and proposal. And I've always found this confusing. When there's calculations required for overhead, they'll say that bid and proposal and R&D, they'll call it direct labor, but to me it's not direct labor, it's B&P and R&D labor. So it's confusing about where those kind of costs go. It's just different names that they give these things that I run into. And then we also talked about Schedule I, that it ties to the billings by fiscal year. So a lot of companies, if they're doing their invoices in spreadsheets, they may have to create a special spreadsheet just for the incurred costs that'll show here's how much it was by fiscal year, because normally you don't break that out when you do your invoicing. And by the way, anytime we're talking about fiscal year, it's not the government's fiscal year, it's the contractor's fiscal year. Most of the companies we work with are small business. They are subchapter S or LLC, and they'll typically have a calendar year for their fiscal year, not always. The Schedule L, labor distribution by payroll, is the one Miriam was talking about a few minutes ago, where you basically got to tie the costs in your general ledger for labor to the wage reports. And one thing I always forget is I've always got to do something to go get my accrued vacation, the vacation that's charged on my timesheets, because it's usually on the balance sheet at the time that I've got to go do this recap. So there's a lot of adjusting that goes into that. I guess the last thing I wanted to do just before we wrap up is say that if you do need help with your incurred cost submission, there are ways that I can help you and that others can help you with it. But you really got to give yourself some lead time. Right now, as we're talking, it's April 24th, 2017. This is due June the 30th. You can't get it done the last two weeks before they're due, because it's going to take more work. What you find is you get started on it, and there's some information you're missing, and so you're going to have to go create other spreadsheets to collect that data before you can pull it into the ICE. It's not something you want to do under pressure. And if you're looking at our YouTube of this, I've got a picture of a couple of people in an ambulance, and one of them is on the stretcher. When we can help you by training you slowly along the way over a period of weeks, we can be very effective. When we help you on an emergency basis, it's more stressful for you. It's a lot more pressure on us. And by the way, you know, it costs more to be in an ambulance than it does if you can just walk in the urgent care. So just keep that in mind. We do have packages we can help you with. I've got something called Hand to Hold, which is a weekly call, and I've got Shoulder to Cry On that includes some one-on-one sessions and some Ask the Expert. So if you are interested in information about that, you can just email me at jwclark@solvability, SOLVABILITY.com for a quote. And if there is any way we can help you with federal contracting issues or questions that you've got, please get in touch with us, and we'd be glad to work with you. And Mimi, thank you so much for being on the show with us today.
Well, you're quite welcome. It was a privilege.
Yep. Well, you know, it just takes us back to all the stuff we've been through in the late nights and how we figured these things out. And there's never a situation where I can do an entire ICE without reaching out to Miriam or Jackie or Laura or one of those many people that I call and ask, have you seen this one before? Because different things pop up all the time. So be sure you've got a good network to reach out when you do have issues. And I'd love to talk to you if there's any questions that I can help you with. Just email me again, jwclark@solvability.com. So thanks so much, Miriam, and I'll talk to you again soon.
All right. Thank you, Jenny. Bye.
All right. Bye-bye.